Recently, you were on a podcast. You said there's more millennials on your platform than Schwab, Fidelity, E-Trade, Vanguard, all combined.
That's right. If we become the place where millennials hold all of their assets and wealth, that's tens of trillions of assets right there. 75 plus trillion of wealth is going to move from baby boomers down to Gen X and Gen Y and beyond in the next few decades.
I recently had the privilege of speaking with Vlad Tenev, co-founder and CEO of Robinhood Markets. Vlad's vision of democratizing finance has empowered millions of retail investors, and his work continues to challenge and redefine the traditional financial landscape. In this conversation, we're going to deep dive into the future of finance, the role that technology has on shaping financial decisions, the challenges and opportunities that lie ahead, and the vision that drives Vlad to keep pushing the boundaries of what's possible. Thank you to Vlad and the amazing team at Robinhood for help setting up this call. But without further ado, please enjoy this conversation with Vlad Tenev. Yeah, I wanted to ask you not just about the quarter, because I think there's going to be a bunch of copycat questions on that. I kind of want to pick your brain on the future of Robinhood and how you sort of envision it over the long term, or finance in general, because you guys are right at the forefront, super cutting edge, and I think that that's important.
Yeah. So over the very long run, I see Robinhood as a global company with customers all over the world. Anyone with a smartphone should be able to use Robinhood, and all of their financial assets and all of their transactions should be custodied at Robinhood and should go through Robinhood. And that's like fairly expansive. Basically, if we accomplish this, we would be the world's largest financial company by some measures. So it's kind of like, how do we get there in a short amount of time? And that's through three things. The core is the active trader business. That's how we generate our revenue. That gives us the tools and the ability to do other things. The active trader business is investments that we make there and product improvements that we make to that business basically turn into customer value and revenue immediately. So the delay is very short. If we make an improvement to our options trading product, that impacts the firm like instantaneously. So that's kind of the first arc, and I think it'll reach maturity, reach its climax in the very near future. So call it like next 1 to 2 years. But then we're also investing in the second arc of our business, which is that we want to be the primary financial institution for the next generation, for millennials and Gen Z beyond that. And so we want all of your assets to be with Robinhood for us to serve you across the wide range of consumer finance products and use cases. That's where Robinhood Gold comes in, with high yield, with retirement, with the Robinhood Gold credit card, which has been very, very popular, and all of our work in advisory and wealth management. And you can kind of track our progress there with Gold subscribers and overall assets under custody. And then kind of the third phase of that is taking what we've built for active traders and for kind of growing wallet share with the next generation and turning it into a system that we can scale internationally as quickly as possible without like too many modifications, and also serving other types of customers like businesses, institutions, small and large. Like if you think about some of the things that we offer, they're useful to businesses as well as consumers. Institutions love low margin rates, 24-hour trading of all sorts of assets, really nice, clean customer interface that just works. So I think in the long run, you'll see a company that serves customers really well with awesome interfaces, low cost, serves businesses, and does so across a global footprint in every major market worldwide. And kind of active trader, a good analogy is that's kind of our Tesla Roadster, right? It's sort of like what gives us the resources and the tools to be able to expand our ambitions further and like serve a broader market. So it's kind of a niche market. It's small, but it's very lucrative, and it's super high value.
It's been amazing to watch you guys sort of transition from, the reputation and trajectory of going from small dollar, like active trader accounts to fully fledged financial services where you're getting into saving, now spending. I really want to talk on the credit card as well. But essentially, the way that I'm looking at it is Robinhood Gold, every product that you guys offer, from cash sweep to buying and selling stocks or options, you guys in some form of another make money with very little risk. The credit card is quite a different step than that. And you guys are offering unbelievable benefits, 3% cash back on every purchase. This is not category card. This is a full-on credit card. Is there any concern that that is going to be a losing, like, profit-generating new product for you guys? Like, the credit cards can be quite risky, no?
Well, one way to kind of look at this business is you can look at companies that do this very, very well, right? And some of them are public, like Capital One, for instance. And they actually do it really nicely. I don't know if you probably spend a lot of time parsing through 10Ks, but you can see the economics of the credit card business pretty clearly. And the economics kind of break down in a couple of different categories, right? There's interchange revenue, which you typically net against the rewards expense, which is kind of a contra revenue. And then there's like net interest margin, which is actually the bulk of it. And sort of like not specifically contra revenue. It's another line item in the expense column, are loan loss provisions.
Right.
So when you take a look at sort of like these traditional credit card companies that are at scale, and Capital One, for instance, has a $150 billion loan book, so massive scale for the credit card business. You can see that if you take the overall revenue and divide it by the transaction volume over the course of a year for the business, you get to a number between 5 and 6%, right? So if you kind of normalize everything based on annual transaction volume, they make between 5 and 6%. Now, why can't they give 3% cash back to customers? I think is a reasonable question. The biggest line item isn't credit risk, and it's not loan loss provisions. It's marketing and advertising and headcount. Like tremendous headcount businesses where they have tens of thousands of employees. Now the idea behind Robinhood is, can we make the value prop and the reward so good that we don't have to actually spend money to acquire customers? Credit card companies are spending $500 plus to acquire a customer and have sign-up incentives. Can we just take all of that and put it into the economics of the product and acquire customers for free? So far, that seems to be the part of the model that's proven out. Like
an unbelievable benefit. The organic growth on this card, I see it. Everyone is talking about your card. It's crazy.
People love the card so far. It's 5-star review on the App Store. They love everything about it. I mean, the customer experience, the design of the card itself, particularly solid gold. The rewards are really good. So we can grow this card for the foreseeable future without spending anything on marketing, which is big. And we can do it as a technology company in a very capital efficient manner without needing thousands of people, which is also really, really important. And then and I know there's a lot of frustration from people about I just want to get it sooner. This rollout is going slowly. And we announced that we rolled out to about 50,000 cardholders. And we're very confident the card will work in the long run, right? But it might take some iteration. And if you look at other successful card launches in the past, we're kind of right there. I mean, they tend to launch to tens of thousands, below 100,000 cardholders in year 0, right? And then they can kind of like expand very, very quickly as the economics are proven out. And what we want to do is minimize the amount of that iteration that is being done sort of like with lots of customers, because even though we're confident, we want to avoid as much of the downsides and footfalls as possible. So we're actually like rolling out at a very reasonable pace relative to other successful card programs in the past.
Yeah, the demand is just so high, it makes it look slow.
Exactly. Like people just want the card so much that, of course, if you have millions of people on the wait list, you're going to see some noise. And, we want to serve them, but we also want to make sure that like we can go slow so that we can go faster down the line when it really matters.
So with this card, you require an annual subscription on Gold, right? Your Gold subscription. So this was really interesting. In Q1, you talked about how the new cohorts of that quarter, about 20% of the people that were signing on to Robinhood were getting the Gold subscription. Your total base this quarter went from 7 to 8.2%, I think it was, of total Gold subscriptions. Do you guys have an end target for where you think that that's going to get? Like, I'm sure not everyone on your platform with very little balances needs a Gold subscription, but on the more like the higher up you go, definitely the benefits scale. Is this something where you get it to 50% over the midterm or something like this?
Yeah, I think that Robinhood Gold is never going to be it's never going to be Costco, where subscription actually gates access to the core service.
Okay.
So it's probably more akin to other subscription products like Spotify or Amazon Prime, where you still get a decent amount of value and you can try the service without signing up for a subscription. But as soon as you get, even a little bit of value, you're going to want to sign up for a Gold subscription. And there's like a strong incentive to consolidate all of your activity onto the platform. And for us, consolidating activity basically manifests in like wallet share across multiple products. So customers in general, there's some customers that use multiple brokerages and multiple bank accounts and savings products, but your typical customer will only use one per category, but they'll use different products for different categories. So I think that's very different from e-commerce, where if you're shopping, you shop at lots of stores generally. And so I think for us, Robinhood Gold is really an incentive to get the best of Robinhood and use all of our ancillary financial services. And so cross-sell is much higher for Gold customers. Gold customers adopt retirement accounts at something like 5x the rate of non-Gold.
Yeah.
So, how big can the subscription be? Some of these great, like your Spotify and Amazon Prime, it can be high double-digit percents, 50% plus.
Gotcha.
So I think that's the aspiration, is to really look like one of the great subscription businesses out there that also gives great value to customers and doesn't require the subscription to try it.
Yeah, no, and I think that's amazing. Now, just to pivot a little bit, you guys have been buying a couple of different, startups and other businesses, I guess. Pluto AI is a very interesting acquisition. You recently just talked about it, how you're looking at it for not only AI services in the business, but also as advisory. How do you make sure that, hallucinations don't happen with such an important topic like personal finance, that Pluto's able to give advice, but also not steer someone in the wrong direction?
Yeah, I mean, that's a big AI research question right now.
Yeah.
I think that if you look at the current generation of models, they have this problem of like very confidently saying wrong things, and that's the hallucination issue. But I think like the next frontier of AI models everyone's trying to solve that problem in different ways. And so I think you should assume that hallucinations become less and less frequent, and there's tools to reduce that are kind of being built around the models currently, like checking things and constraining the output and putting in guardrails in place, and sometimes like training other models to validate the outputs of the models. So that's maturing, but my thought is that's also going to be eventually replaced by less hallucinations in the base models as well. So
Gotcha.
we're not really worried about hallucinations, and humans also hallucinate, right? They hallucinate at like some surprisingly high rate, and you don't necessarily have to be perfect, or you just have to be 10 times better than a typical financial advisor.
Sure. So just on the topic of AI, because I wanted to ask you about this, how do you even foresee markets heading, whether it's how much human intuition and trading behavior is going to stick around as new models are starting to potentially include themselves in people's buying and selling of equities? Like, how does this play out over the next 10 years?
Yeah, and I should say I'm very pro-human too, and I think there will be a large amount of this where humans will be using these AI tools, whether they're advisors themselves, or if you're a trader and you're kind of using the tool as a research assistant or an analyst that helps you kind of like synthesize information and read 10 Qs and earnings reports really, really quickly and like pick out the salience. So I think there will be a large amount of this just used as a co-pilot, kind of a co-pilot use case rather than autopilot. And that's true for advisory as well. And we're very pro-human, and we want to give these tools to humans. The great thing about trading is that I think that a great use case for AI are things that humans are doing and are valuable, but they find boring and they would rather not do. And I don't think trading is that. Like, our customers love it and they want to keep doing it. It's not like a chore that they would rather outsource to someone else.
Sure.
So I think in that sense, like the behavior there is AI proof or AI resistant to some degree. I don't think you have to worry about AIs just kind of like making trading obsolete. But I do think that the time scale that the trades occur at is important. So for example, if your trading strategy involves short-term price predictions on the order of seconds, that's going to become very, very competitive. That's a competitive space, right? But if your time horizon increases and you're kind of like making long-term predictions and you're buying companies because you think the product roadmap is trending in the right direction, you have to worry less about like algorithmic trading and high frequency for those types of strategies.
Yeah, no, I like that, right? I don't know if AI is going to be as good as predicting the next Google or Amazon or something like this, as much as it is going to be making fast decisions, I guess. But in terms of other acquisitions, Bitstamp, this was super interesting. So you guys are now in the crypto exchange space, international crypto, clients now, institutional clients. Why did you guys look to acquire this business, and what does it mean for the future of Robinhood?
I think we always kind of understood that at some point there would need to be a Robinhood exchange, and it was just a question of whether we would build it ourselves or whether we would see an opportunity to bring a team on board that can accelerate that by, in this case, 18 to 24 months or something in that order of magnitude. If you look at Bitstamp, what we really liked is this is one of the oldest crypto exchanges. I think the oldest continually operating. And
2011 or 2012, something like that?
Yeah, it's sort of like the first wave.
Yeah.
So they've been through a lot. And if you go to Slovenia, which is where they started, this is like there's like an immense amount of pride among those folks and among Slovenians that this is like one of their iconic companies. And so we see a lot of potential there. We like the team. I think for Robinhood, it gets us into institutional and it accelerates international, and it'll help our retail business as well, which is kind of an area that I think Bitstamp had some gaps. They didn't have quite as competitive of a retail direct to consumer offering. So we could see it fitting in quite nicely, pending the approval.
Got you. So, in terms of, I think you spoke on a little bit earlier about businesses wanting your services, but could you see institutions also becoming clients of Robinhood on the equities and option side as well?
Yeah, absolutely. I mean, if you look at all the things that we've offered, institutions love commission-free trades, no
Sure.
contract fees for options, lowest margin rates in the market. So I think all of these things that we offer could be useful to institutions, and we've had a lot of outreach about that over the years. Now the question, as with all of these things, is like we don't want to do too much at the same time, and we've got a lot of work to do in consumer. Probably the bulk of our work is going on the active trader side. A decent amount is going into building wallet share, and the smallest, sort of like most nascent component is international expansion and kind of expanding the customer base to include businesses. So I think that will reach its climax probably 10 years from now, you should assume. But we're going to make consistent progress. But unlike active traders, you're probably not going to see that in the P&L of the company immediately.
Got you. Just staying on Bitstamp and crypto in general, how do you foresee cryptocurrency as a market changing? Do you see utility in some of these actual tokens, not only to potentially help your company and finance in general? Maybe tokenization of assets is sort of the wave that I'm going down, but
yeah,
how's your team sort of focused on that, and where do you see the future going?
Yeah, I'm a big believer in tokenization of assets. I think that is the future, and the reason for that is we've got a unique vantage point across both of these businesses. We've got a large traditional assets business. We also have a large cryptocurrency business, and we can compare the efficiency of operating both. And you can see on the cryptocurrency side, it's just like much cleaner. A lot of the things that are being done by centralized legacy institutions are being done in software. So you've got like transfer agency, clearing and settlement. I mean, there's like large corporations that do that, and they're not open on weekends, which is something that is preventing us from offering 24/7 equities trading, for instance. But all of that's being done in software on blockchains. And so you get things like you not only get lower efficiency and cost of operating, but you also get more customer-facing features built from scratch that are very valuable. And that's things like in the equities markets, fractionalization and 24/7 trading built in. And so what I think will happen is more and more assets will become tokenized. That'll become a key use case. You're already starting to see it to a certain degree, because if you look at where the bulk of blockchain transactions are being done overseas, it's all dollar stablecoin volume. So there was an article that came out a couple weeks ago that said USDT on Tron, so this is Tether stablecoin on the Tron blockchain, has exceeded the daily volume of Visa, right? And so why is that? Well, it's because you have a lot of people in these markets where their currencies are hyperinflating, and they don't want to hold Bitcoin. They want to hold US dollars, right?
Yeah.
And somewhat kind of counterintuitively, stable coins on crypto rails on non-custodial wallets are the easiest and lowest friction way for them to get their hands on dollars. And I think that's a big part of the rising adoption that you've seen. And why Tron stablecoin? That the Tron blockchain has its share of issues, but it has low transaction fees, which is very, very attractive to people. So, if you can deliver low transaction fees, if you can deliver a low friction way of giving people access, and people want access to the thing, which US dollar is kind of a prime simple example, but you can also see that US equities and all sorts of other assets, particularly outside of the US, are highly in demand. I think you're going to see that. So I think you're going to see tokenization take off outside of the US. And eventually it will probably be accepted in the US, but the US will sadly be a laggard here for the same reason that we're kind of a laggard in high-speed rail, right? It's like we have something that kind of works good enough. There's existing businesses that have strong interests in preserving the status quo, and they're not going to want to. Eventually it'll happen, but we'll have to work with those existing businesses over here. And people are going to fight it. Whereas overseas, I don't think it's going to be as controversial. So I think it'll mirror the adoption of high-speed rail, where ironically, like outside of the US will be the lowest friction and easiest way to get access to US assets within the next probably 5 years.
It's so true that happens all the time. These massive leapfrog events in technology, because a lot of places, like even here in Canada, we don't adopt some of the newer technologies because what we have is just simply good enough.
Yeah.
But in terms of 24, you were talking about your 24/5 markets with Blue Ocean ATS and everything. There's been recent events that have sort of the 24/5 markets have had a little bit of trouble. When does this become mainstream and have enough liquidity so then there is no problems? Like, is this a 1-year time horizon, or is this a 10-year plus time horizon for 24/5 markets to become more mainstream?
Yeah, that actually, so Blue Ocean ATS, which went down on Sunday night, which was very unfortunate because like the volumes on Sunday night were extreme, 3x our typical 24-hour market day, and customers really wanted that access particularly that day. So that was disappointing, but it wasn't a liquidity issue. Liquidity was fine. It was just a straightforward technical infrastructure problem. Like there were just too many users and too many orders, and I think there was some kind of issue with their database and it just fell over. So
got you.
Yeah.
But speaking on liquidity really quickly, what are your thoughts on instant settlement, and is this ever going to take off? It's seeming like we're ticking in the right direction, T+1, but when do we get T+0?
Yeah, I think it's the same high-speed rail analogy. I think that it'll go slow. Eventually it'll happen, but like T+1 probably gets us halfway there. And I think there's like folks that'll fight the move to T+0 settlement for a variety of reasons, including, fairly benign ones. Like it's going to be a huge investment of resources and technology, and they'll have to upgrade the mainframes. And they'd probably rather not do that unless they're absolutely forced to do that.
Vlad, I got one more question for you. The great wealth transfer. Recently, you were on a podcast. You said there's more millennials on your platform than Schwab, Fidelity, E-Trade, Vanguard, all combined.
That's right. Yeah.
I saw another article that recently said that millennials will be the richest generation in history. How does Robinhood benefit from this great wealth transfer, and sort of explain the timeline of how this happens? Because it might already be starting.
Yeah, I think it's starting. I think that, if we become the place where millennials hold all of their assets and wealth, that's tens of trillions of assets right there. 75 plus trillion of wealth is going to move from baby boomers down to Gen X and Gen Y and beyond in the next few decades. And what we're working on is three things, right? Making it as easy as possible to transfer your assets into Robinhood. And up until a couple of years ago, we didn't even have that capability. You couldn't move assets into Robinhood. So we announced and launched ACATS. We've layered in incentives, and those incentives are going to get better and more personalized and like smarter over time. Even though they're already pretty good, and we can offer those incentives that no one else can. We have to have support of all of the account types and asset types. So trust accounts, custodial accounts. We just rolled out joint accounts, which are a big step as well. And then I've generally been I think mutual funds are in some ways an outdated concept. But a lot of these assets are stored in mutual funds, and a lot of folks are holding fixed income, which are assets that we currently don't support. So we'll have to add support for those, and continue to make sure the user experience and the capabilities and the service improve. And then I think we will be the home for a large portion of those assets.
Just really quick, I'm sorry, but as a CEO running a multi-thousand employee company, how do you keep them all hungry and make them or help them deploy all of these products at such a quick rate? Because that's the one thing that Robinhood just excels at. You guys are putting out new products, what seems like on a weekly basis.
Yeah, I mean that's a big topic. I think I have lots of thoughts on culture and making sure you have a great team of people and you set goals appropriately. I think like the one interesting thing, if I had to distill it to kind of one sentence,
Please,
is that your typical financial company is fine with like large numbers of fairly mediocre people. And you can see that in kind of like outsourcing and offshoring. Like they have an outsourcing strategy where you can get huge teams of people overseas. And of course, we make use of great people overseas, but the general principle is we want a small number of like exceptionally elite people that can do great things. And I want the culture to be a culture of like the smartest people in the room around you that are bouncing ideas off and pushing each other. And I think once you have those types of people, they're pushing each other. And like I have to do a little bit less, right? Like my aspiration is to kind of be like the dumbest person in any meeting at Robinhood, and I think that would be a pretty good end state for the company.
Yeah. Vlad, thank you so much for joining me, man. This has been amazing.
Thank you. Always a pleasure. Hopefully we'll do it again.
Yeah. Talk soon.
All right. Cheers.